What's up, YouTube fam? Welcome back to the channel. As you can probably hear my voice, I'm a little jolly right now because it's been a great day for the account. We're up 1,600. On the week, we're up 4,000. So without further ado, let's just get into it. First off, we'll talk about the SMCI trade that we just took. So on, what was it, Friday, we sold SMCI puts for 134. As you can see, we collected an easy $102. No problems, no issues, just smooth sailing. So what made us take the play? So we go in the higher time frame, right, and we see that, it looked like it basically bottomed out with a big green candle. It's funny. So someone in our Discord made a comment. They said they don't like selling puts on green days, and I've heard that many times now. And I'm going to tell you why that's wrong, right? Notice how when you look at a chart, notice how almost every time it's a red day, it's followed by more red days, and a lot of times some sort of retracement or bearish, pattern. So if your mantra is I only sell puts on red days, well, guess what? You're going to sell puts after this, and then you're going to have to deal with all this, right? Basically losing money, rolling, stuck in a position for months. Now, I'm not going to sit here and say you should only sell puts on green days. You need to find that balance, right? Like in this case, I sold a put after a green day because, in my opinion, the best setups come from after the market has retraced, after it shows signs of bottoming out and now breaking out, right? It's common trading logic in that regard. So in this case, I see it breaking out and I have the ability to have a strike below what is a very powerful demand, right? So this was supply. As you see, it broke through. Now supply becomes demand. You'll notice a lot of the time, the most powerful levels are flip zones, right? So in this case, again, we see that it tried it. Now I love to use the gone box as my, like that's what it's called in TradingView, right? Where is it? Just to show you guys. And then you would have to change the settings. It's not going to look like this. You have to change it to look like this. But the point is, this really gives me a very clear picture of what I'm looking at. So in this case, what I like to do is I like to drag it from a wick to like the end of the body, right? And that's how you get these zones. Now, obviously, zones, supply, demand, support, resistance. These are simple concepts, and a lot of people do it different ways. This is just how I do it. But the point is if you're only going to sell puts after red days, in my opinion, you're setting yourself up for disaster. Because again, majority of the time, the market follows what it's been doing. So if your thing is, I'm going to sell a put now that it's a red day, you might end up dealing with all this where, listen, again, I'm not saying you should sell puts after green days. I'm saying you should use your logic in the sense of just because it's a red day doesn't mean you should sell a put. And just because it's a green day doesn't mean you shouldn't, right? You should be taking in all factors, whether it's news, earnings, revenue, other catalysts. There's just so much to consider. So yeah, if you're only going to sell puts on red days, to me, that doesn't make sense. To me, I'd almost rather sell a put on a green day because think about what selling a put is, right? You're going against the put market, right? So you're not betting on the market to go up. You're not betting on it to go down. You're betting against puts. That's what you're doing, right? You are saying, I bet that this put will lose value. So if you're selling a put on a red day, you're going to get stuck in a situation where you're like, maybe I should have bought a put, right? So with that being said, that's that trade. Now, in terms of how our account has really grown, it's really simple stuff, right? If you've been following this channel from the very beginning, you would know that I've been in this position for a month now, and I've been rolling it, and I've been talking about why rolling is so important. And a day like today is just a clear indication, right? A $1,500 day, which, as I said in one of the recent videos, you're not going to get this type of day selling options really with my account size unless you roll, due to the fact that, listen, you could sell deep in the money puts, so maybe you could, but ultimately, I wouldn't want to sell deep in the money puts, right? I'd rather just buy shares at that point. Like, listen, I would sell at the money. I would sell maybe a little bit in the money. There's been a lot of arguments back and forth as to whether you should sell in the money puts. Me personally, if I'm going to sell a put, I want to get the lowest entry possible, right? So, when you look at a put option, right, like let's look at some options. And let's just say I wasn't in this position and I wanted to sell one right now. So notice how when you select this, what it does, it tells you what your entry would be. So if I was to sell a put on the 44 and I did get assigned, my entry would actually be 41.35. So the argument for selling puts in the money is, let's say you go for 49, your entry is still 44.30 because it's this minus the premium. So it's still lower than 47.85. So there is an argument where it could make sense. In this case, it's still lower. And if I was going to sell in the money, I would do it until at the very least below the current price of the shares. So like here, we're still below, so we can keep going. Let's see. So you'd have to go really high up to, yeah, so you'd have to go all the way up to 65 for your entry to be the same as if you just bought right now. So listen, there definitely is benefits, right? But you notice how the higher you go up, yes, the more you'll collect in premium, but at the same time, the lower you go, the lower your entry ultimately is. And that, in my opinion, the ultimate way to get wealthy with selling puts and how you're going to limit your downside the most possible is by going out of the money and by taking it a step further, which is doing what I do and looking for strong levels. So in the case of the CONL position, which not for nothing, I did put this trade idea in my Discord as well. Not to say that I took it or that I'm taking trades, but more of just giving people thoughts of my analysis of the market. I definitely saw Bitcoin climbing up. I also said in the Discord, which again, it's another trade I didn't take, but I said I wanted to take TQQ calls last week. Now, this isn't a buying option channel, but that doesn't mean I can't ever buy options, right? If I am going to buy options, it would have to be deep in the money because of the fact that I don't want it to lose value as quickly as when you go out of the money, right? If you go out of the money, you really don't have any time for it to mess around. But if you go deep in the money, then, you know, in a lot of ways, it ends up moving the same as if you just bought the shares. So these are just play calls that I've called out. So if you want to just keep getting my analysis, my opinions, definitely check out the Discord. Definitely make sure to join. But what I wanted to discuss was this CONL position. Now, here's the thing, guys, right? I sold. So when I originally got in this position, I actually sold the 55 puts, and it was up here. So obviously, it completely pooped on my strike, right? And this could have been a disaster. Now, luckily, due to the fact that I sold the put and didn't just buy the shares, I was able to roll. So I rolled it all the way down to 50 and obviously had to go for a further date. So when you look at how I managed the position, right, you notice how I had the 55 for 12.20 and I was able to exchange it for a 50 for 117. So not only do I get a lower entry, but I also buy time. And that's why I was able to collect a credit. So not only do I get a lower entry, right, at 50 instead of 55, but I actually make $144 in the process. So obviously, that only really matters if I actually do get assigned. If I don't get assigned, which, you know, we would know by the 17th, the latest, ultimately, I would just collect all of the premium. So right now, it would be $1,700, but assuming this position does become worthless, you have another 620 times by 4, which is, what is that, 1240 times by 2, 2480, which I guess it does say here. I'm sitting there doing the math in my head. Forgot that it says it right there. But the point is, right, is that's what selling puts is all about. Like, obviously, there's the argument for, oh, if I'm super bullish, I'll sell in the money puts to collect high premium. But, you know, you're just not limiting your downside as much as you should be, right? Like, if you're selling puts, you're doing it because you're someone who cares about limiting their downside. Otherwise, there's plenty of opportunities to just buy, right? Not to say that selling puts in the money doesn't have its own benefits, because you still could roll and you can still do a lot of good things that selling puts offers. But my point is, like, I sell puts because of moments like this. Like, the fact that I've sat through, when I entered the position, the stock was here. It was at $60, I remember. So I've rode a stock from 60 all the way to 47, and I'm only down, you know, sorry. Let's see, my account's down from, you know, I don't actually know the date that I took the position, but I believe I was somewhere in this range. So I'm only down like $1,300 on a $20,000 position. So I'm down 5%, give or take, right? Meanwhile, if I would have owned the shares from 60 to where it is now, I'd be down 20%. So that's just the moral of the story, right? That's why we sell puts. We sell puts to limit our downside. Now, obviously, the strategy doesn't always work, right? Like, I sold my puts what I thought was below a demand, below a demand. And ultimately, like I said, it went right through it. And that's going to happen, right? Eventually, you're going to be wrong. I will say that I've taken on this channel, I don't even know how many trades, 40 to 50 trades, and I've won on, I think, almost I think I've pretty much won on every single one, because even this one isn't a loss. Even the MSTX debacle that some of you were tired of hearing me talk about, I rode it from here all the way down here and got out here for a gain, right? So that's something that's really only possible with selling puts. And if you're going to sell puts in the money, it's just going to make it a little more challenging to be able to do that. That's my only argument against it. And ultimately, I just feel like if I'm going to sell puts, I want to be selling out of the money, because selling out of the money just gives you more opportunity to win, right? When we look at the premiums, so let's just pick a random stock to look at. We'll go after Rumble for this one. And notice how when you select puts, and at this point I would go next week. So notice how it tells you the chance of profit. Notice how the chance of profit goes down the deeper in the money you get. The reason that is because if it starts going against you, you have no breathing room essentially. But when you sell out of the money, it goes higher and higher because of the fact that you have more breathing room. Now, obviously, in this case, you do get less premium. So, you do have to find that balance, right? Like, you don't want to go so far out of the money that the premiums are not worth it, but you also don't want to go so far in the money where you're putting yourself at a disadvantage, as opposed to if you just bought the shares or just sold out of the money puts. So essentially, that's all for this video. That's how we've gotten to where we've gotten. Right now, we have 6,300 in buying power. I'm sure I'll end up finding a way to use this today. And that's the other thing I love about selling puts is it's one of those games where you don't really have to worry about being super patient. Like, obviously, yes, there are moments where patience is better. There are better entries. There's better ways to time it. But ultimately, this is one of those games where time is in your favor, right? Like, if you're selling an out of the money put, every second every day that put is out of the money, you're making money. That's essentially the essence of why I do it the way I do it, is because I want more things in my favor. The market is a very challenging game. It's a very humbling game, right? It's going to show you that you don't know what you're talking about. And ultimately, I'm okay with that, right? Like, I feel as if I'm confident with what I see when I look at the charts. A lot of times the charts have proven to me that I've been right. Now, this isn't to say like me bragging. This is years of losing, right? Like, did I see Bitcoin going up? Yes, I did. And did I call it out and did I say it? Yes. But again, this took years of me losing. And I can give you an example. Was at one point yesterday, right? If we go on a lower time frame, we can see it. At one point yesterday, it was rejecting off of this supply. So it created the supply, came below, and here, somewhere here or here, it looked like it easily could have fallen back down. Now, with that being said, the moment I saw it break through, and now at this point, right, that supply now is demand, that's when I had the utmost confidence we were going to go up. And at this point, it will be the same thing when it gets here, right? When it gets to this level, then it's like, okay, it's either going to hold the supply and reject, or it's going to break above and do the exact same thing. And that's how the market works. You start to really simplify it in the sense of like, the market can only do so many things, right? Like, a candle can only move so many directions. So as much as, yes, there is a lot of little things that could fake you out, a lot of little tactics, a lot of little tricks that the market can do to squeeze as many people out as possible, in essence, it's really only going to do two things, right? It's going to get to a supply zone or a demand zone, and it's going to reject it, or it's going to break above it and then flip it and turn it, from supply into demand and vice versa. So at this point, if you were to ask me what I see Bitcoin doing, I absolutely see it getting up to this zone. And then again, it's like we go here and we either do this or we do this, right? So it's either going to get to the zone and ultimately come back down, retrace it and fall, or it's going to get to the zone, come above it, retrace, test it, and continue up. So that's how the market moves, right? The NASDAQ, another very important thing to consider. And notice, when you look at the NASDAQ chart, it really is the same concept, right? This wick created this big demand zone. It came back into it, and it came up. So again, this stuff, when it comes to selling options, it's not as relevant because of the fact that since you are selling puts and just collecting premium, you don't need to know the charts that much. But the more familiar you are with how the charts move, the more likely you're going to have winning trades. Like, I don't think the average option seller is going to win as often as I've been winning. But if you start to apply a lot of the tactics I've discussed in this channel, then you will win as often. And ultimately, the more familiar you become, the more you can start buying shares, or even, dare I say it, buy options, especially, obviously deep in the money, then you would have my blessing. But the point is that selling options and looking at the charts just makes you a better trader. If you the more you sell options, the more familiar you become with how the options move, and will become a better option buyer. And the more you look at the charts, the more familiar you are with how the patterns are, and the better you will be at trading, whether it's closing a position, entering a new position, etc. So I hope you guys enjoyed this video. I hope you learned a lot. Make sure to comment your thoughts. Make sure to like the video. Help me out with the algorithm. Make sure to subscribe to continue to see where I take this account, right? It's been an insane run. We've took it from starting at 20,000 on November 6th, all the way to 25.2 on the 15th, all the way down to what was once 19,000, now back up to 23.8, which is why I feel so great. And I'm very confident we'll be back at all-time highs on this account soon. I hope you guys enjoyed this video, and I'll see you guys on the next one.